managing those. For example, I like reading, I like music, I like movies, I like lots of things. So how do you release time for all that while the work pressure is there? So one of the basic mantras is that I sleep very little, so it releases a lot of time. Morning time, it's a time when I need to, as far as possible, I need to see sunrise. I like seeing sunrise. I do a lot of reading, and I like reading all kinds of things. It can be fiction, it can be non-fiction. I read a lot on war. I like reading even non-fiction books on crime. So lots and lots of the areas that I like.
Let's talk about the crude oil prices then, which are headed down for a straight year. Nearly 8 years lowest is the kind of slide that we have seen coming out for that one. 48% down for Brent prices. NYMEX is down nearly 42% as well. And our own Indian markets have seen a very harsh slide coming in for that space. Ram, let's start with you first. And what's your sense now coming in for the crude oil prices at these levels? While we seem to have made a near-term bottom, but do you think the first month of the 2015 yet again seeing some volatility?
Somewhat I was thinking that 53.50 or 53.60 level it held very well, and it has bounced back to almost $57, $58 on international market. But today only it has broken that 53.50 level, and it has gone below 53 level, suggests that the further downside is still intact. And I don't see for at least for another 1 or 2 months or 3 months down the line that this bounce will come very soon. Overall, the trend, if you see that on a break of 53.50, it is opened up for 45, and my ultimate target is around $35. Maybe people are talking about $20, but I am looking from technically, it's $35 which I am looking at. In domestic market, only because of the rupee factor, it is the prices are not coming down, but maybe around a range you may see between 3,000 to 5,000 kind of a level in 2015. Okay. The main important thing is the way the dollar index is moving. It has already crossed $90, and it is the moment it broken that 92, 93 level, it straightway it goes higher towards 106. That is what the technical level is suggest. If that is the case, I don't see any that bounce you may see in crude oil prices in international market and even in domestic market. But overall range, I may say around $35 to on upside around $75, because it has already at the closer bottom of this level. So overall, it's very difficult to crack that 65 and 75 mark, at least in 2015 level.
We will watch out for those levels. Naveen, are you in agreement to that kind of a decline?
I don't think so. It will be something which really needs to see and look into through a little more fundamental eyes. Now, the point is, Manisha, we have already seen a decline of around 45–50% on the crude by mid of summer from this year. All the factors, whether they're related to the ample supplies, whether they're related to the OPEC cutting or not cutting the production levels, are being discounted at. Yes, I agree, $20 levels is something being talked about, but then and it's been talked about by somebody who's one of the largest producer on the crude oil. So means I think yes, I'm not so bearish. Neither I would like to scare the people around of ensuring or making it through that the prices may touch even $20. But definitely I will think and I say that the prices would be around $45, $50, $55. Means kind of a level of around $50 to $60 where the Brent and the WTI may consolidate, seeing all the fundamental news factors now being factored in. For the Indian markets on the M6, we are seeing prices at around 3,400 levels. On the downside, we may see prices touching at around 3,000 levels. And on the upside, the range would be approximately at around 4,500 to 4,600 levels. Upside is not there. The only positive beamer, Manisha, can be seen on the upside would be the monetary stimulus package if it comes from the ECB or Japanese or the Chinese central banks. If that continues to go in, we may see the economy expectations building up, and hence the demand for the crude moves up. So I think with the negative and the positive factor in place, I would be really in for the consolidation at around $50–55 levels for the WTI and the Brent crude.
Kishore, what is your sense? The crude prices may continue bearish. We are perhaps expecting more pain there, but what's your sense on natural gas for the new year now?
I think both of these commodities have been, especially the recent fall in crude, has actually distorted the long-term outlooks or the fundamental analyst perspective in energy markets. Yes, definitely. I think I'm not significantly bearish on crude. Obviously, I think this is again a one-sided market. 90% of the market believe that probably the crude is going to go down further, or it is still bearish. Again, a lot of option activity at around, if you look at 4 months option activity at around $48 strikes, there's a lot of build-up happening. I think a lot of expectations are there, but I think 20 is again abruptly ruled out. So probably I think around $45 to $48 is one thing where the bottom can be found, and that too I still don't believe that it will be coming in the immediate future. I think we'll be consolidating here, and then obviously if today at this point of time, if the shorts want to cover the positions also, I think there is no fresh selling people who can come and sell at these levels. So that itself will take the prices back to around maybe 60 odd levels. So I think we'll be looking at the range of 45 to 75 kind of a levels in crude. Obviously, I'm not in the $100 category again. So I think 75 is a fair level, and a 45 on the lower side is a value buy. At the same time, for natural gas, I think that's where the effect of rub-off effect of crude is going to happen, because a lot of shale oil which becomes unproductive, or the resources which are deployed there, will be converting back to gas, because shale gas is still not that less profitable comparative to the shale oil is much less profitable right now. So that resources deployment will go back to gas, which enhances further the production of gas, which will destroy the prices here. So I think I'm much more bearish in gas than in oil, and probably we are looking to $2 or sub $2 levels in gas.
24% down in this year for natural gas prices on your screen. So this area is looking, or continues to look, bearish. Vijay, what's your levels coming in for 2015 now? Because we've heard 20, we've heard 45, we've heard 70 on the higher side also. Which side are you bending?
Manisha, I've been bearish on crude since the ISIS attack on Iraq. Right up to December, I've been calling it a deleveraging market. I would still bet my money that it's a deleveraging market, this time with a difference. From 12th of December onwards, I've been calling a refrain from fresh short positions. I remember saying the risk-reward ratio does not warranty fresh shorts. Although it doesn't mean that crude prices cannot decline from here, but it's going to be extremely difficult for a short seller who's entering now to start making as much money as he would have had he gone short in June or July. I think you should be fishing for bottoms, and I would be feeling fairly comfortable buying crude oil futures on the MCX starting from 3,550 levels. I'll stagger my purchases in a very systematic manner, in a pyramid fashion, where lower levels I would buy slightly larger quantities. I don't see crude sinking substantially below 3,100 to 3,000 levels, or even if it does, staying there for a prolonged period of time. I would bet my money on the fact that the Saudis are now a whole lot more savvier than they were in the oil embargo of 1973, or in the decline of 2006, in the second midterm elections of President George W. Bush, or even the decline of 2008 for that matter. So I would be bottom fishing on crude. I would be buying crude starting from 3,350 levels. I'm calling it a technical pullback. I'm not saying that it's a complete trend reversal, but it'll be a fairly bankable pullback. I would be surprised if crude during 2015 calendar year did not touch anything between 3,800 to 4,000 levels, and then possibly a fresh view can be taken. But at this point in time, as we speak, I would definitely not short crude.
Kunal, what's your sense? I mean, we of course have more pain continuing for this energy. The fundamentals are still bearish, but do you think most of this has been factored in? Are you buying at lower levels?
I think we have already started to see stabilization in oil prices. After the massive fall, 45-50% fall in energy prices is something we have not seen from a long time post 2008. What is dramatically likely to change in the first quarter of 2015 is already the oil rig counts in US started to fall in last 15 days. So we've on account of that, we've already started to see that the decline in WTI has moderated. Now I see going forward, because of the winter season, the demand of the distillate and other products are going to remain robust. So I do not expect for the time being WTI to go below $50-52, and at the same time I'm expecting a sharp up move during the first quarter of 2015, where I expect WTI to bounce back from $55 to at least $62 to $63 per barrel, and I see the decline from here is likely to restrict, and even though the fundamentals are not bearish, I think most of the negative news at $55 are already priced in, and now with oil rig counts in US started to decline, I think a bounce back or a recovery is on the way. So the overall view is still not very bullish. I don't expect WTI to again go back to $80, but a bounce back till $62 to $65 looks very likely. Post that, we have to again see how the summer season, how the production is going on, but I think 55, 52, this seems to be a stabilization level, the bottom level for oil.
All right, so that's a view really coming in from our experts on the energy sector as well. With that, we'll let you all go. Thank you, Kunal, Kishore, Ram, Vijay and Naveen for coming here and giving us your top ideas in case of the non-agro space, especially for precious metals and energy, where we seem to have made a bottom, but the pain, or rather the volatile moves in 2015 also are expected to continue. With that, thank you so much for watching this special show on Hot Commodities.
हम इतना चाहते हैं कि आप बारातियों का स्वागत पान पराग से कीजिए। ओह, पान पराग, पान पराग, पान पराग, पान मसाला, पान पराग।
Hey, that presentation's today. Can we do it?
Okay, done.
Hey, Dad, I love you forever. Don't forget, we're in this together.
Now do what's important to you with the Samsung Galaxy Note 4.
Keep it safe, stay alive, keep a distance, let's not dive. Keep it safe, stay alive, get busy living, don't drink and drive.
If you are careful about small moments, why drink and drive?
At 8 p.m, the talk is all about the markets.
The hits and the misses.
The ups and the downs.
What news is moving the stock?
And what's shaping trade.
Stay one step ahead of the market.
Get street smart on Market Up.
Only on ET Now.
Presented by Hettich Fittings. In association with BMA Wealth Creators. Building relationships, creating wealth.
We are at the cusp of history.
A bull market is a once-in-a-lifetime opportunity.
India is the best emerging market.
You seize it or you lose it.
It is a buying opportunity.
So what are the multi-baggers for this bull run?
Consumer IT.
Find out from the smartest investors.
It is a roaring bull market.
Buy into the stocks that are on a roll.
The market has given very good returns.
And make your fortune from this multi-year bull run.
The best bull market that India has ever had.
Riding the bull at 2 p.m. on every trading day. Only on ET Now.
The closing bell is closing in on you.
But the next 1 hour could define the trading day.
We bring you the micro view of what's moving and driving the markets in the final session.
Catch India's top technical experts disclose the best closing strategies.
And help you pick the best price today that will give you supernormal profits tomorrow. As markets come to a close,
opportunities open up with closing trades. Only on ET Now.
Presented by NSE Investor Protection Fund Trust. Powered by PCJ, नए ज़माने के हीरे.
Hi there, very good evening. You've joined us right here on Rush Hour. I'm Tanya Bharadwaj. Let's take a look at the headlines. First up, after a year of duty relief, automakers could soon be left to fend for themselves. Finance Ministry sources seem to indicate that excise duty SOPs may be withdrawn from the new year. That's an ET Now exclusive.